I think the name of this panel says it all in terms of filling the void. So I wanted to start with that. That's the obvious question. Who or what, James, do you think will fill the void that's been left by USAID?
I see this as a void of financing development and leadership in inclusion. And I see the best positioned people to fill this development gap and financing is the private sector. Mm-hmm. The private sector has enormous resources. It has worked alongside DFID, whether it's the philanthropists, whether it's civil society, whether it's corporations. So together, they should be able to fill that gap.
I mean, this is a huge gap. You think that they can do it between them?
I think we'll talk of 85 billion, proportionate to the capital of the private sector. It requires maybe a 2% contribution by the private sector. 2% will overwhelm the gap that we have in financing.
And then Leslie, so I want to put that to you. Specifically, I mean, I wonder, how do you go about unlocking the capital? Because this is what you do as a DFI.
No. I think, Alexis, my starting point would be that the development finance world have been ripe for reinvention, ripe for change and to refresh our tools of the trade. So this moment is a moment of opportunity. In 1944, the World Bank was formed, the IMF was formed, and it laid the basis for how the development model works, which essentially is leveraging money from the capital markets. We use the high creditworthiness of the World Bank, Asia Development Bank, European Investment Bank. Development finance institutions are the only AAA remaining institutions in the world of finance, which means we have a low cost of capital, and through that, we're able to finance infrastructure in the developed world. Right now, there's a need for greater innovation. We have to go back to the drawing boards. The world has evolved to the point where we've got to refresh our toolkits. So James is correct in saying that the private sector is at the center of it. So in short, your question of how it will be done, we need to be much more catalytic. Instead of us as BII, for example, we deploy about $2.2 billion, as we did last year, into the developing world of Africa and Asia. We want to do that in a much more catalytic fashion. So every transaction we finance, we need to mobilize third-party money from pension funds, insurance companies, sovereign wealth funds, from the institutional investor community.
And is that what you mean? Can you just break down a bit more what you mean by catalytic?
Yeah. So we, as BII, our theory of change is investing in companies for development impact. We have a portfolio of over 1,500 companies throughout the world. We employ over 1 million people. We invest in companies that are both financially sustainable as well as deliver development impact. So what we are now saying, instead of us originating these transactions, we'll originate it in such a way that we will use our capital in ways that can improve the risk-return profile of some of these projects so that it reaches the threshold that is acceptable for these commercial institutions. Because many of the jurisdictions in which we operate, countries in Africa, fragile and frontier markets like Sierra Leone, like the DRC, where we have investments, you will never find Prudential or Allianz or BlackRock or Brookfield investing in those. However, there are many markets, emerging markets, that have much more stable characteristics, some of the middle-income countries, for example, where we can invest and bring those investors alongside us and generate sufficient returns that those institutions would be comfortable with. Ordinarily, they would not enter some of these deals, but we will do it in such a way that we can use more blended finance structures to use our capital in such a way that it can improve the risk return.
And James, as a banker that operates on the ground, what would you like to see? What do you think can affect change?
I think there are a couple of things that will catalyze the private sector coming in to fill the vacuum. The first one is standards. We need now to establish what are the standards of investment. We're talking of replacing an economic order that has been there for 100 years with governance structures and institutions. And the question is, will the markets, the capital markets, replace those structures? And it's then, if that will be the case, we need to see how capital markets can democratize access such that this new order gives everybody an opportunity to play into the game. And that is really the issue. The standards we are talking about is transparency, is openness, it's known standards so that everybody can play by the rules.
But this is something that would have to happen very quickly, isn't it? Because, I mean, the pace of change, the volatility that we're seeing, I mean, specifically, what would have to happen to change those standards?
I think markets respond very quickly to opportunities. Whenever there is an opportunity, markets respond quickly. Capital moves with speed because capital is very informed of market opportunities, and so it looks at the opportunities. Here is an opportunity to fill this opportunity because good opportunities are scarce. So not much needs to happen. It's just the market. If there's an opportunity to rethink asset classes, and we see, for instance, some of these development opportunities being classified into an asset class so that people can access, people can evaluate, then it becomes easier for money to flow very quickly.
New asset classes, any thoughts on that?
I think that both of us, James, has been a pioneer on the African continent. I've worked for most of my career on the African continent. Before I come to new asset classes, just want to make the point that we are both, strongly optimistic about the possibilities to adopt new technology, innovation, AI-powered tools for Africa to leapfrog the developmental challenges that we face. In order to do that, we need to look at it through that lens of developing new asset classes, finding ways to create liquid asset classes that the capital markets players can participate in. We will not be able to transform the economic landscape of Africa through individual transactions with all of our institutions, right? We have to do it at a systemic level. And the only way to do that is to embrace the power of new technology. So in agriculture, in health, in every domain where there's agro-processing, there is we're entering a new era when it comes to artificial intelligence. So we are really very excited about the potential that it holds for the African continent. Exactly like digitization have transformed banking, mobile telephony has completely transformed the world of communications. We believe we're at such a sort of transcendental, transitional moment right now.
If I may add, I think the biggest opportunity would be if there is convergence to breaded finance, such that market capital looking for a return, bottom profit, works together with the philanthropic capital, looking for impact. If the two worked together, then we will be able to not only catalyze, but also de-risk and capacitate. And that will almost ensure nobody is left behind. So that ability for all classes of capital to work together and provide the market with one solution of breaded finance, because of the asset class we are talking about, it will be very impactful.
I'm struck by that, and also what Leslie was saying about technology. I know both of you, technology has played a big part in your careers. James, I know with you, that's a way for you to democratize the banking sector. Leslie, just on that point you made about AI, in terms of playing devil's advocate, the counter-argument would be that at the moment it looks like Africa, across the continent, there's a disadvantage when it comes to AI because it's power hungry, and you have 600 million people in Africa who don't have access to constant electricity, constant power, let alone meeting the needs of, say, data centers that you need. There isn't the underlying infrastructure in place. So how do you think the continent can overcome that to harness the power of AI in the way that you've described?
I mean, in the last, already for some time, I'd say probably for the last decade, but more so today, energy and energy access or energy poverty is at the heart of, or the most critical lever that will transform the economic landscape in Africa. Ajay Banga, the president of the World Bank, launched an initiative called M300, which is aimed at by 2030, which is around the corner, by the way, to electrify 300 million people, 300 million homes on the African continent. A very ambitious idea. There's a series of strategies. We don't have time to talk about it now, but that is the ambition. I was very encouraged by the statement by Scott Besson this morning, identifying power and energy access as the number one developmental priority for the developing world. So there's a convergence in thinking. So when it comes to the African continent, and by the way, for those of you who are not familiar with the numbers, 80% of the people in the world without electricity reside on the African continent. So if we are unable to solve that problem, the demographic numbers, if we don't create 600-700 million jobs for young people in Africa over the next 2 decades, we are doomed, because Africa will be the size of China and India combined in the next 25 years. So coming back to your question around energy, data centers, and so on, the cost of renewable energy today makes it possible for Africa to really become the hub of green energy, and for us to be able to transport. I mean, we already have some of the biggest solar parks in the world, in Egypt, for example. We should be able to build, based on the current projections, make Africa the hub of green energy, and transform whether it's healthcare, education, and so on.
And I just want to actually piggyback on what you said about demographics, because I think that's the underlying issue in so many of these conversations is demographics. And as we know, Africa is the youngest continent. Now, there's an opportunity there, but there's also a danger, because if there aren't enough jobs, you alluded to that, then it causes problems, political instability. So, I mean, James, what do you think? How can that situation be transformed? Because so much of this, in terms of filling the void, is about addressing the needs of those people.
Markets quickly reorganize themselves. By 2050, Africa will have over 42% of all the youthful population. It will have 33% of the world labor force and 26% of the consumers of the world. And that will be what will be the force of reorganizing the marketplace, because that will contribute to 2 major factors, the consumer and the labor. And as Leslie said, Africa has 62% of undeveloped renewable energy. So the supply side is ready to be driven by the market as market. So if you combine that with 65% of all arable and utilized land being in Africa for agricultural purposes, if we then combine that with the critical strategic minerals that particularly that will leapfrog the energy transition, then Africa is very well positioned to reorganize the global market, the marketplace.
And in this conversation so far, there's been a lot of optimism. We've spoken about Africa, and we've spoken very much about the role of the private sector on the continent. We haven't spoken about outside actors, the alternatives to the US. I mean, what this has exposed is the extent to which African economies have relied on money that came from the US. So now that's being withdrawn. Who fills it? What about China, for example, or anyone else? What do you think, Leslie?
Look, I mean, I think the first point to make is that there's a general acknowledgement and acceptance today by most policymakers throughout the African continent that there has been a degree of what you can broadly call aid dependency. Mm-hmm. So the end of aid dependency is a positive development for Africa, where, in some countries in Africa, 35% of their health budgets was dependent on USAID and others. Now, to keep your people healthy, to treat people with HIV/AIDS and tuberculosis and other diseases, etc., and to be relying on outside resources for that was surely unsustainable. We have to move from the basic foundational point that ultimately economic development can only be done by national governments, countries taking ownership of their own economic development futures. International cooperation can only play a complementary role. So the first point is that although it's been dramatic in the way that the aid infrastructure has been dismantled, it is a wake-up call because 80 years actually after Bretton Woods and 80 years since the World Bank has been in existence. About, I think USAID was formed in 1962 by John F. Kennedy, so they've existed for over 50 years. And abruptly it has ended. So I think for the last 5 decades, there's been a sort of lackadaisical approach to just accepting that there's these inflows, right? African countries now recognize that they have to develop their own people, their skills, and build their own institutions and own their own economic futures.
So in short, just to be clear, in answer to the question I asked about China, you're saying don't look overseas.
Or with respect to China
Yeah.
and every other major economic power, I don't think the African heads of state and the people that we interact with within senior people in government look at this moment through the lens of, we need to find another USAID elsewhere. Ownership of their own economic futures is the starting point. China is already a significant investor on the African continent, number one trading partner to most of Africa, but there are also other significant actors from the Middle East, for example, in Africa. There are a number of European players that are active in Africa. So there's not a binary sort of US versus China domain. I think it's very simplistic often where, because the number one and number two economy in the world sort of draw the most attention or suck all the oxygen. We in Africa do not look at it through that lens. The world is, multipolar, and we have to look at a constellation of players when we redesign the future.
Okay, thank you very much. Look, I appreciate it. We could talk all day, but I think that's it for us. So thank you very much for taking the time.
Thanks for having
James,
us.
thank you, Leslie.
Thank you.
Thank you.